Gold and silver had a good week last week, and so did the mining stocks. But this week was the cherry on top. Gold finally hit a new all-time record high earlier today. We traded, I think, for the first time ever above 3,450. I don't think we quite closed above that level, just below it. But gold had a great week. It was up about 2.5%, over 2.5%. Silver had an even better week. It didn't hit a new all-time record high, but it did hit a new 13-year high. In fact, silver almost traded $40 an ounce. I think it got within about a nickel of 49. It closed around 39.80-ish. I forget exactly. In fact, I don't think they've settled it yet. I'm doing this podcast just after 4, and they're still trading. But it is a new 13-year high. This is a great close for the week and the day ahead of a holiday weekend. We've got the Labor Day holiday on Friday. In fact, I would expect a gap up in both gold and silver. I think by Tuesday, when American investors are back looking at the markets, I think that you could see a big gap up, whereas silver opens above $40 an ounce by Tuesday, and gold above 3,500. We'll see. Now, the gold stocks, again, as I mentioned on my podcast 2 weeks ago, continue to lead the way now. They're not being dragged behind like they were reluctantly, with investors completely skeptical of the gold bull and expecting it to die any day. Now, the gold stocks are leading. In fact, as of, I think, this week, gold was down about 2% during a time period where gold stocks were up 20%. Gold was just consolidating while the gold mining stocks were catching up. That's why I was hammering the table back in April, May of this year about buying the gold stocks, that was the best place to buy gold, was in the ground, because these stocks hadn't even moved yet. Well, now they're moving. And in fact, the GDX, which is the larger gold mining stocks, is now up over 87% on the year. This is shaping up to be the best year maybe ever. I mean, I guess if you went back to the 1970s, I don't know if this index, I don't think it existed back then. This is certainly the best year in the history of this ETF, and the year's not even over yet. I mean, I think that gold stocks are going to more than double as a group, which means some stocks obviously do a lot better than that if the average is a double. But right now they're up over 86%, excuse me. It's the GDXJ, the juniors, that's up over 87% so far on the year. So these stocks are making a big move. The year-to-date gain on gold is now 32%. Gold is having a phenomenal year. Silver up 38%. But I think once we get above 40, we're going to make a beeline for 50. And then, as Katie barred the door, once we're above 50. And I've been saying, don't wait for any pullbacks. You're not going to get any meaningful pullbacks. You just got to buy. Yes, you're buying the highs, but you're going to have to buy the highs or you're not going to buy. And the problem is the highs are going to keep getting higher. And so the longer you wait, the higher the high you're going to buy. So don't wait. In fact, remember when silver first moved above $30 an ounce, I was telling people that 30 is the new floor, that 30 on silver was like 2,000 in gold. And I was telling people when gold was at 2,000 and they were afraid to buy it because they thought it was the peak, I said, no, 2,000 is the new floor. So buying 2,000, 2,100, you're getting in near the bottom. People were afraid it was the top. I kept saying that this is a new day. This is a big bull market. You got to buy this level. And sure enough, we're almost 3,500. We're going a lot higher. Same thing with silver. Silver was 31, 32. I kept telling people, you got to buy it. It's not going to go much below 30 if it even goes below 30. So you're getting in close to the bottom. Now here we are knocking on the door of 40. Don't wait for 50, right? Yes, would it have been better if you bought it a couple of weeks ago? Sure. I tried to get you to buy it a couple of weeks ago. But if you didn't do it then, do it now, right? Why buy 50 when you can buy 40? And the move from 40 to 50, that's still a 20% gain. You buy $40 silver at $50, you got 20%. But 50 isn't going to be the top. It's nowhere near the top. In fact, I think once we get through 50, 50 will be the new 30. 50 is going to be the support for silver. You'll be lucky to be able to buy silver below 50. Right now, it's a double top from 1980 and 2011. That resistance is going to become support, just like $2,000 was the resistance in gold from 2011 to 2024. It was resistance. It then became support, right? Resistance becomes support in bull markets. So we're going to blow through that double top, and 50 is going to be the new floor for silver. So get in now while it's a lot cheaper.
Gold and silver had a phenomenal week last week, but this week was the cherry on top. Gold finally hit a brand new all-time record high. Earlier today, for the first time ever, we actually traded above $3,450 an ounce. We didn't quite close there. We closed just shy, but that doesn't matter. This was historic. Gold was up about 2.5% on the week, which might not sound like much, but remember, we're talking about a $3,400 asset. That's a $90 move in a few days. And silver had an even better week. It didn't break its all-time high, but it did hit a new 13-year high, coming within a whisker of $40. I think the intraday high was around $39.95. It settled closer to $39.80. But who cares? Silver has not been this high since 2011. Now here's what's even more important. This close came ahead of a holiday weekend. We've got Labor Day, so U.S. markets are closed on Monday. What that means is we could see a gap up on Tuesday when traders come back. Don't be surprised if silver opens north of $40 and gold gaps above $3,500. That's the kind of momentum we're dealing with. But the real story isn't just the metals, it's the mining stocks. They're finally leading the way. For years, investors were skeptical. Every time gold rallied, the mining shares lagged. People assumed the bull market was a fake-out, that it would die any day. But now the psychology has flipped. Gold stocks are not just tagging along, they're outpacing the metal. And that's exactly what you should expect in a real bull market. Take the GDX, the ETF of larger gold miners. As of this week, it's up over 86% year to date. The GDXJ, the juniors, are up 87%. Some of these juniors are doubling and tripling in months. This is the best year on record for these ETFs, and the year isn't even over. Gold itself is up 32% year to date. Silver is up 38%. We are in the middle of one of the most powerful precious metals rallies in modern history. And I hate to say it, actually, I love to say it, but I told you so. Back in April and May, I was pounding the table. The best way to buy gold was in the ground. The mining stocks were dirt cheap. Everyone hated them. Nobody wanted them. And I said, this is the time to buy. Well, now they've broken out. They're leading. They're confirming the bull. This is exactly how the big moves start. First, the metals move, then the miners catch fire, and then eventually the general public wakes up and piles in. At much higher prices, of course. Look, I've been warning for years, the dollar's in trouble. The Fed is boxed in, the government is drowning in debt, and the only real money left is gold and silver. Well, the market is finally waking up to that reality. And if you're still sitting on the sidelines, still waiting for a better entry, you're making a huge mistake. I've been telling people, stop waiting for pullbacks. You're not going to get them. Yes, you're buying at the highs. But in a secular bull market, the highs just keep getting higher. If you sit around waiting for the dip that never comes, you'll end up buying at even higher prices later. If you can buy at all. Think back to when gold first broke $2,000. People said, that's too high. I'll wait for a pullback. Well, now we're at $3,450. Was waiting smart? Number. Same with silver. When it broke $30, people said, I'll wait for $25. Guess what? We're kissing $40. And let me be clear, $30 is the new floor for silver. $2,000 is the new floor for gold. Those resistance levels are now support. That's how bull markets work. Resistance becomes support. So when I say don't wait, I mean it. Sure, maybe silver dips back to $37 or gold dips to $3,300, but who cares? If you're waiting for 25 silver again, you're dreaming. That's not happening. Now, some of you are still stuck in the mainstream mindset. You're thinking, well, inflation is coming down, the Fed is going to cut rates, stocks are near all-time highs, maybe I don't need gold. Wrong, inflation is not coming down. Prices are still rising. The CPI is a lie. The government massages the numbers. Look at your grocery bill. Look at your rent. Look at your insurance premiums. Inflation is alive and well, and it's not going away. Even if headline CPI ticks lower, the dollar is still losing value. And rate cuts? That's the punchline. The Fed has to cut rates, not because inflation is dead, but because the government can't afford the interest bill. U.S. debt is over $35 trillion. Every percentage point in rates adds hundreds of billions to the annual interest expense. We're already paying close to $2 trillion a year just on interest. That's more than we spend on defense, more than we spend on Medicare. Soon it will be the biggest line item in the budget. The only way to keep that balloon from exploding is to force rates lower. And the only way to force rates lower is to print money. That's inflation. That's dollar debasement. That's rocket fuel for gold and silver.
Why are gold prices, why are silver prices moving, right? For the reasons that I've been laying out for years now, but it's playing out right before your eyes on this giant stage. Look at what the Trump administration is doing to the Federal Reserve. I mean, up until now, they've at least had the pretense that the Fed was independent. Now, I've said that this was all BS, that there was no real independence, that behind the scenes, they were working hand in glove. Well, Trump dropped the pretense. He is now making it obvious to everybody that the Fed is political. He is stacking the Fed with his own cronies. He is coming up with dirt on people so he can fire them, so he can replace them with his own cronies. And he wants to move interest rates down. Why does he want to move interest rates down? He tells you, because we can't afford the rates. He says the U.S. government needs to save money. We need to cut back on our interest expense. He says the housing market can't handle these high mortgages. We need lower interest rates so people can afford to buy houses, right? So we're too broke for the interest rates that we have now. Except the interest rates that we have now are low. They're just not as low as they used to be. And because we have so much debt, we need those super low interest rates. But the problem is those super low interest rates aren't going to work for our creditors. The people that are loaning us this money aren't going to keep loaning us money if rates go down. And in fact, when Powell cuts rates, I think long-term interest rates are going to rise. And that is going to really upset the Trump administration, because the sole purpose of cutting short-term rates is to lower long-term rates. Well, the last time the Fed cut short-term rates, long-term rates went up. That's one of the reasons they stopped cutting, because they didn't want to put any more upward pressure on rates because rates are too low. And lowering them further is just going to unleash more inflation. But what's really going to unleash the inflation tsunami is going to be when the Fed goes back to QE, because that's exactly what a Trump-stacked Fed is going to do when the rate cuts don't work. When the rate cuts cause long-term interest rates to rise, then the Fed is going to have to start buying those bonds, because the world is not going to want to buy them, because they're going to see through the charade. If inflation is going up and the dollar is going down, why are foreigners going to want to lend us money? Why is anybody going to want to lend the U.S. government money? The U.S. government is telling all the creditors, we don't give a damn about you. We just want to lower the interest rates we pay you. As we debase the dollars, we pay you in. So people aren't going to want to buy the Treasury at the lower rates. So the only buyer is going to be the Fed. And the only way to do that is to create inflation by printing even more money. By the way, the dollar index closed the week down again, back below 98. I think it closed around 97.80. And yields on U.S. Treasuries rose on the week. They didn't rise a lot, but look at the yield on the 30-year Treasury at 4.92%. That's almost as high as it's been. I mean, the highest it got in the immediate aftermath of the Liberation Day sell-off was just above 5%, just barely above 5%. Now, the 10-year has recovered more. The 10-year got just above 4.5, and it's down at 4.23. But we've gotten a widening of that yield curve between the 10s and the 30s because higher inflation expectations are being built into the markets.
So where does this all lead? That's the question people always ask me. They see gold breaking records, silver knocking on the door of $40, mining stocks doubling, And they wonder, how much higher can it go? The better question is, how much lower can fiat go? Because this isn't really about gold and silver going up. Gold doesn't change. An ounce of gold today is the same ounce of gold it was 1,000 years ago. Silver is silver. What's changing is the value of the paper it's priced in. Gold isn't rising, the dollar is falling. And the dollar is falling because the government and the Fed are destroying it. Let's start with the fundamentals. The U.S. national debt is north of $35 trillion. We're running $2 trillion deficits as far as the eye can see. That's not in wartime, not in a depression, not in some emergency. That's during supposed prosperity. Imagine what happens when the recession hits. Revenues fall, spending rises, deficits explode. Interest expense is already the fastest growing item in the budget. We're paying close to $2 trillion a year just to service debt. Think about that. We're borrowing money just to pay the interest on the money we already borrowed. That's a Ponzi scheme. And what's the Fed's plan? They're pretending they can fight inflation while keeping the system afloat. They can't. Inflation isn't 3% or 4%. It's double digits if you measure it honestly. Look at shadow stats. Look at your grocery bill. Look at insurance premiums. The CPI is a rigged carnival game, and the Fed knows it. They're praying nobody notices. But the metals market has noticed. That's why gold just broke $3,450. That's why silver is about to blast through $40 and head to $50. Here's what happens when silver clears $50. All the people who said, oh, it's just resistance, it's just a double top, they'll flip. $50 becomes the new floor. The same way $2,000 became the floor for gold. From 2011 to 2024, $2,000 was resistance. Once we broke it, it flipped to support. That's how bull markets work. Resistance becomes support, and the next leg higher begins. So when silver blows through $50, that level will become the floor. And people will look back and say, I should have bought at $40. I should have bought at $30. And let me tell you, there won't be any meaningful pullbacks. Every dip will be bought instantly. Too many people are waiting on the sidelines. Too many central banks are buying. Too many sovereigns are de-dollarizing. If you think you'll be clever and wait for the perfect entry, you're going to miss it. The train is leaving the station, and you're still fumbling with your ticket. Now let's talk about the miners again, because they're the leverage play. Gold is up 32% year to date. Silver's up 38%. But the GDX is up 86%. The juniors, GDXJ, are up 87%. Some individual names are up 200, 300%, and we're still early. In past cycles, mining stocks went up 10-fold, 20-fold. That's not crazy talk. That's history. In the 1970s, gold went from $35 to $850. Silver from $1.30 to $50. The mining stocks went vertical. We're setting up for the same thing, only bigger, because the debt, the deficits, and the money printing are bigger. And don't forget, the public isn't even in yet. Retail investors are still asleep. CNBC still treats gold like a sideshow. Wall Street analysts still scoff at silver. Imagine what happens when the headlines are unavoidable. When gold is $5,000, $7,000, $10,000, and silver is $75, $100, $150. Then the herd will stampede in. By then, the smart money will already be sitting on massive gains. That's how these cycles work. The early adopters get rich. The latecomers get table scraps. Here's a tweet I saw the other day. Gold at $3,450 is the market politely saying, we don't trust you anymore. Silver at $40 is the market shouting it. Exactly. That's the dynamic. This isn't about traders chasing momentum. It's about the world losing confidence in paper. And let's be clear about the paper markets. COMEX and LBMA are fractional reserve casinos. Maybe 5 to 10% of the contracts can actually be delivered in physical metal. The rest are paper IOUs. That system only works as long as people don't stand for delivery. But more and more are doing just that. They want the bars, not the paper. Once a big contract fails to deliver, the game is over. Confidence evaporates and the paper market implodes. then prices will gap higher violently because nobody will trust paper promises anymore. We've already seen glimpses of this in other markets. Remember the nickel short squeeze in 2022? The London Metals Exchange had to cancel trades to save the big banks. Imagine that in silver. Except silver isn't some niche metal. It's essential for industry, technology, medicine, and money itself. If silver gets squeezed, the fallout will be global. And here's the irony. Governments have spent decades suppressing gold and silver prices. They smash them with paper shorts every time they poke their heads up. Why? Because they didn't want the truth exposed. A rising gold price is a falling vote of confidence in fiat. They needed gold low so they could say, "See? The dollar is strong. Treasuries are safe, but now the suppression game is failing. Sovereigns are buying the dips. The East is draining the vaults, and the West is waking up late to the party." Let me add a little humor, because sometimes you just have to laugh at how absurd this all is. I saw a meme that said, the Fed's strategy, step 1, create inflation. Step 2, deny inflation. Step 3, pretend to fight inflation. Step 4, blame everything except themselves. That's the playbook. And unfortunately, the mainstream media falls for it every time. But the metals don't lie. They're breaking out because reality is breaking out. And the reality is this: the US is broke. Europe is broke. Japan is broke. Everybody is broke. The only thing keeping the system going is the willingness of investors to pretend otherwise. But gold and silver are exposing the pretense. Now let's answer the question, how high? Look at history. In 1980, gold hit $850. Adjusted for CPI, that's over $3,000. Adjusted for real inflation, it's closer to $15,000. Silver at $50 in 1980 is over $200 in today's money. So when I say $10,000 gold and $200 silver are realistic, I'm not exaggerating. I'm being conservative. In fact, those targets may end up looking low when this cycle is over. And here's another point. Central banks themselves may be forced into a formal gold revaluation. It's happened before. In 1933, FDR confiscated gold and revalued it from $20 to $35. That was an inflationary reset. Today, with debt levels so obscene, the same thing could happen. They could announce gold is officially $10,000 an ounce to reflate the system. Will that help them? Maybe temporarily, but it will also send a clear message. Fiat is broken, gold is the anchor. The public will learn the hard way. When silver breaks $50 and never looks back, when gold gaps $500 overnight, when mining stocks double in weeks, that's when the headlines will scream. But by then, it'll be too late for bargains. That's why I keep hammering, don't wait. Don't try to be cute. You're not going to outsmart this bull. Just buy. Here's another tweet I liked. Buying gold at $3,500 feels expensive until it's $7,000. Then it feels like theft. That's exactly right. The same people who thought $2,000 gold was too high are now kicking themselves. The same people who thought $30 silver was overpriced are now scrambling at $40. And they'll do it again at $50, $75, $100. Human psychology never changes. And let me address the Bitcoin crowd for a moment. I know some of you are out there saying, forget gold. Bitcoin is the new safe haven. Look, I'm not anti-Bitcoin. It may have a role. But here's the difference. Central banks are not buying Bitcoin. They're buying gold. Russia isn't stockpiling Bitcoin. China isn't stockpiling Bitcoin. They're buying thousands of tons of gold. Why? Because gold has 5,000 years of history as money. Bitcoin has 15 years. Gold is universally accepted. Bitcoin is still speculative. Could Bitcoin play a role? Sure, but it's not replacing gold. Not now, not ever. So where does that leave us? It leaves us in the middle of the biggest bull market in precious metals in our lifetimes. Gold is breaking records. Silver is on the cusp of doing the same. Mining stocks are exploding. The fundamentals are the strongest they've ever been. The technicals are confirming, and the psychology is shifting. This is the perfect storm. And if you're watching this and still not acting, ask yourself why. Are you waiting for CNBC to tell you it's safe? They won't. They'll ridicule gold all the way up. Are you waiting for the government to admit inflation is real? They won't. They'll lie until the last minute. Are you waiting for your neighbor to start buying? By then, it's too late. The time is now. Don't wait for $50 silver to convince you. Don't wait for $5,000 gold to wake you up. By then, the easy money is gone. Act now while there's still time. I'll close with one more joke because sometimes a bit of humor makes the truth easier to swallow. Someone posted, the US dollar proudly losing 97% of its value since 1913. But hey, at least it's stable. That's the reality. The dollar is the world's most successful failing currency, and gold and silver are the antidote.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.